So in this session, we are broadening our horizons a bit more globally, and obviously geopolitics, not just domestic politics, which is in something of a crisis today, but geopolitics, of course, deteriorating hugely in the last few years, whether that's in Ukraine, whether that's in the Middle East. We're all facing mounting pressures, as John decisively pointed out earlier. Defence spending has to increase. That's now, I think, for most people, a given. But it's just how, where, when are the questions. So in this panel, we're really going to be examining how private markets can support plugging that gap in defence spending, specifically how Guernsey might be able to help. And we'll also be touching on other areas of regulation, liquid capital, and so on. But I'm going to ask Peter to kick us off. Obviously, as I said, it's been a tough environment around the world. Guernsey's private investment fund went through not one but two revisions last year, removing the upper cap, various other things. Just explain to us what that was and what it means.
Well, I think in general terms, the reforms in 2025 to the PIF regime just greatly simplified the regime in Guernsey and made it far more understandable for fund manager clients who, we were trying to explain the regime to with the help of Guernsey Council to understand their structuring options in Guernsey. So it made the process of establishing and obtaining licenses for Guernsey fund structures far simpler, far faster, getting back to the speed point. More structuring flexibility. So for fund managers who had regulated entities offshore that could act as the manager of a Guernsey structure, you didn't necessarily need to have a Guernsey licensed management entity anymore. A clear range of investors to whom the qualifying PIF could be marketed to, sophisticated investors through private offerings, and not necessarily any need to prepare a PPM for the fund, which for those familiar is the sort of big long marketing document with all the commercial details and information about the fund manager alongside legal and regulatory disclosures. And actually there's a real trend in the market towards not necessarily producing a PPM if it's not needed for the particular fundraising in question. So the reforms were very well received, and we were already using Guernsey structures, as Mark on the prior panel was alluding to, see exactly the same across all kinds of different use cases. And that has very much continued, if not accelerated, following the reforms. I think also the reforms were very helpful in being positive changes for first-time fund managers and emerging fund managers. And that has been an area that I think is there's a lot of first-time funds in the market. And so having that regime available for those managers is fantastic. And I was going to talk a bit about what Guernsey could do next for first-time fund managers, but I'm delighted to hear, as of the seminar this morning, that it's already happening with the Fund Foundry team. But I think, beyond just having the structures and regime in place that's friendly to first-time fund managers, at the end of the day, the PIF regime is for all fund managers, from, massive global asset managers down to the emerging managers. And I think having more of an ecosystem and a focus and hand-holding for those first-time fund managers navigating the regime is a fantastic development and will be really fruitful going forwards.
Okay, that's all very interesting. Tony, I would love to hear about Spitfire. What are the investments that you're making? Why Guernsey? What's your experience been like?
That's a fairly broad spectrum. So Spitfire is a private equity firm. It's actually a hybrid fund. We're focused on investing in early stage weaponry, so late stage venture, growth equity, and a few larger cap transactions. As you guys know, the market is very large. So NATO spends, call it $1.5 trillion a year. The market in general spends $2.5 trillion a year. Why Guernsey? Guernsey was quite different than the other jurisdictions that we looked at. So while I've been told, I guess, as the American, it's okay to talk about things like Luxembourg. So Luxembourg was fee-laden and regulatory-laden. And Jersey was an interesting option, but our general focus was and belief was Guernsey was a little more fashion forward and regulatorily flexible. And so for a first-time fund and a first-time team, investing in defense, that mattered enormously, because in many of these jurisdictions, we were the first defense fund that anyone had dealt with. And so there was no template on how to deal with a defense fund. Guernsey made that efficient. They were, as Jack mentioned at the very outset, essentially a solutions-oriented group. They had pre-calls with us to understand what was going on and direct us. During the process, they helped direct things, all of which made it very efficient, very quick, and managed cost, which for a first-time fund is terribly important.
And how relevant was it for you, or how much of a challenge was it for you, if it was a challenge, the way that defence is perceived?
There is, as I think many of you understand, a rapidly changing perception about defense. So historically, defense has been an area that the major investors, the pension funds, the insurance companies have avoided. In many cases, their investment policy statements have language that effectively prohibit investment in lethality. So it's a hard area, or was a hard area to invest in. There also wasn't much to invest in. If you think about it, over the last 50 years, the only real investment in defense has been investing in the primes, in the Rheinmetalls, in the Boeings, in the other very large companies that contract with governments. So, and that's on the public sector. There was no real innovation, and so there were no new companies that you're investing in, hence there was no real private capital related to it. That's changing. Now all of a sudden, you see capital allocated to defense budgets. Europe is moving towards 5%. If you talk to the Mideast or in Israel, it's existential. In Asia, Japan and Australia recognize the threat of China. And so money is moving in very aggressively. And then all of a sudden, there's an enormous amount of innovation. And I'll give you some real examples. So I've spent the last 35 years in private equity in the United States. Everything is intermediated. We just started fundraising. We have not turned the deal machine on. In the last 90 days, we've seen over 60 transactions, none of which is intermediated. What that means is the purchase prices are much better. And you can structure things in a much more friendly manner. So it's a very exciting area and growing area to invest in.
Tony, thank you. Louise, Tony has really explained how things are changing so incredibly fast within defence and investing and so on. But obviously, all these other changes that are going on in the world that are disrupting supply chains, disrupting politics and geopolitics. What does that mean from where you sit?
Yeah. So I guess just as a bit of a background, we invest in energy supply chain, so industrial companies in the energy supply chain. So we're not always affected by commodity prices per se, but obviously any disruption in the supply chain, as we've seen through the conflict in Ukraine with Russia having to come out and people having to find alternative solutions for that. And now with the Middle East, we are definitely seeing that there is, a disruption in the market. For our portfolio companies, they are generally fairly well insulated from it because our investment strategy has always been to buy and build, to diversify so that we're not dependent on any one source, and to make sure that we've got a broad customer base. So, we do have some companies that are based within the Middle East. Those companies are obviously disrupted in terms of the fact that they can't have people on the ground, in offices there. So they may be working remotely. For some of our training centres that we've got there, that's moving on to e-learning. We also have some companies where they may be shipping a product to the Middle East, which obviously with the Strait of Hormuz coming to a complete standstill just means that all of those revenues and the EBITDA is moving out to the right. But what we do see is that that is going to be, coming back again, and we think that there's going to be more investment coming in. We think that it's going to change the opportunity that's out there. So from our perspective, we see that there's going to be a bit of a change in the thought process on here. Resilience is going to be one of the key things that people are going to be looking for. So in terms of energy security and reliability. So we think that there's going to be an increased investment going forwards in critical components and engineered products, maintenance and life cycle services, because everybody wants everything to be running for longer and more efficiently. Digital and optimization technologies, again, those are going to be key areas to be investing in, as well as efficiency, because if you can reduce your energy usage, obviously that reduces your reliance on things. And so, there will be a structural shift to where supplies of energy are coming from, whether that be green, with an underlying oil and gas coming through, but you're still going to need to have a diverse supply of that, and that efficiency side of things is going to be key.
Very, very interesting. Without wanting to sound, Ruth, too like what first attracted you to the multimillionaire Paul Daniels, in that style of questions, I'm sure we're all over. But in that vein, what did first attract you to Guernsey?
For us at Gresham House, Guernsey has been a home for our funds ever since Gresham House and its sort of current guys came along in 2014. But for me specifically, I'm a co-fund manager of Gresham House Biodiversity Creation Fund, and in launching our second vintage of that fund, being that we are in the business of creating landscape scale habitat restoration all through England. This is really catalysed by the Environment Act and the biodiversity net gain requirements on developers. We really wanted to position our fund in a credible and very just have a real sort of regulatory framework sitting over the top of it that could help passport that fund outside of the UK through Europe and Asia. And the key thing that I'm really delighted to be able to talk about today is the fact that the Guernsey regime allowed my fund to get the very first Guernsey Natural Capital Fund designation earlier this year, and that is a world first, both for Gresham House and indeed for Guernsey. And that goes a really long way to giving that kind of regulatory framework and passport for my fund. And that designation isn't just a tick box, it's actually a really stringent set of frameworks that we need to adhere to. That requires monitoring, it requires measurable natural capital outcomes. So this is very much more than just a self-certification that managers make. And actually in an environment where greenwashing is a real problem, having both our own fund mandate sitting alongside a Guernsey designation, together with the EU SFDR Article 9 designation that we've got, really adds a huge amount of credibility when we take our fund and our fundraising as we currently are. I think what I would also say is that we're seeing it matter outside of England, and we've talked about different jurisdictions and different domicile for funds, but it is really helping us in our conversations in Asia and Europe just to show that level of rigour sitting behind the claims and statements that we're making.
And what about the geopolitical backdrop to all of this? What difference does that make to your fund?
I think the geopolitical backdrop is making it hard for many fund managers in our area, but what it also does is create quite a lot of opportunities, because it's actually influencing where capital wants to go. And actually for my funds at the moment, earlier in the year, DEFRA together with MI5 and MI6 published a report that really set out how the biodiversity crisis is actually a matter of national security. So we're thinking about defence and defence spending. Having a fund that's actually investing in biodiversity to try and stop that crisis actually feeds very much into that geopolitical tailwind that we're seeing play out right in front of us.
Yeah, interesting. Peter, coming back to you, just listening to the different experiences of the panellists and thinking, you know, they've all found help and good service in Guernsey. But is there more that Guernsey can do you think?
Well, I think part of it is, around the trumpeting of the achievements and achievements like the one that Ruth was describing. You know, I think having these being trumpeted so that other fund managers are aware that for example, marketing a Guernsey fund to EU investors under MPPR regimes, is a perfectly viable option and route for marketing your fund, for raising capital. Equally, I think if we're looking more at the sort of first-time fund manager, I think more of as I was mentioning, more of an ecosystem around that to really help focus on the particular pain points that the first-time fund managers have in terms of sort of the fixed cost burden, the non-linear progression that they often experience getting to the first blind pool fund, that sort of thing, having an organisation, a system that is going to help show them exactly the route to set up the first fund, have for example, a regime around deal-by-deal investing and warehousing vehicles and that sort of thing alongside the QPIF regime and so forth. That would all be very helpful to help galvanise more capital to move to and then successfully raise from Guernsey.
Yeah. And Tony, anything to add from your perspective of the pain points that you think could do with some salvation?
Regulatory is certainly one. Cost is certainly another. And then just simply help with, as a defense fund, since there was no template, a pain point that actually Guernsey managed beautifully was walking us through what was allowed and what was not allowed. And if you think about it, of course, the role is to defend the island's reputation. And so who wants to have nuclear or biological or chemical weapons on the front page and have that associated with Guernsey? Nobody. And so working with Guernsey, where they asked really useful, clarifying questions to better understand what is it that you're going to do? What's prohibited? Can you give us a doctrine? Would the NATO doctrine work? Well, the NATO doctrine allows for investment, for example, in nuclear. We won't do nuclear. So it actually helped us because it clarified in our own documentation, here's what we will do, and more importantly, here's exactly what we won't do.
Yeah, very interesting. Ruth, as far as you're concerned, no, in fact, Louise, I want to come back to you, just picking up on anything that the panels have said about pain points, anything that you would throw in the ring.
I mean, I think wherever you set up a fund, KYC, AML is always a pain point. And I think anything in the industry as a whole that can be brought in to streamline that and to ease that process would be helpful. I think one of Guernsey's selling points is that you can have LPs from pretty much any jurisdiction. And the fact that you have tax transparency that can go through there and repatriate funds to them that they can pay tax in their own jurisdiction is a very important selling point. But you also have that regulatory framework around you. But I just think that Guernsey's DNA is really in private equity. They've been looking after private equity funds for the last 30 years plus, and they should sell that.
Ruth, would you agree?
Absolutely, and actually from a sustainability perspective, because I know that that's an area that Guernsey really wants to be a sort of a front runner in and a differentiator. And whilst I think I agree with everyone from a general perspective that cutting down on red tape and making it easier to do business is a really key quality that Guernsey brings, but from a sustainability perspective, actually having the kinds of standards and the rigour that it has with the green funds and the natural capital fund designation and so on is actually really helpful, because in that particular market, that level of rigour and credibility is so important in actually making these sorts of funds and attracting these sorts of managers to want to come to Guernsey, because it's more than a marketing label. It actually really does add a layer of credibility.
And Peter, some say that there are lots of misconceptions about doing business or investing in Guernsey. Would you agree? And if there are misconceptions, what are they?
Well, I think, a key misconception, and, speaking to, for example, first-time fund manager clients who've already been sort of steered down the Luxembourg route, for example, or another sort of EU AFM structure, it is that misconception that it will be more challenging to market to EU investors under national private placement regimes than seeking to raise capital with the benefit of the marketing passport if you go with an EU structure. And it's certainly true that there will be circumstances, contexts in which it makes perfect sense to go down the route of getting the passport and having an EU structure where you can access capital that way. But equally, if your fund is being targeted at very specific, sort of maybe a smaller number of EU jurisdictions, investors from those jurisdictions, there are real benefits to going down a Guernsey structure, national private placement regime route. And the benefits, I think we heard some of them on the previous panel, the cost savings, administrative simplicity, and also a degree of control over your fund, your structure, because, there's less involvement of third-party AFMs, depositories, etc., than would be the case with a Guernsey fund structure. So I think that misconception is something that I think has to be challenged. And again, part of that, as I was saying before, is about trumpeting the very good experiences people have had. And also, I think there is probably a role for organisations like Guernsey Finance, the GFSC and so forth, to perhaps provide more guidance and assistance to fund managers considering Guernsey structures, if it's like sort of template documents, compliance manuals, whatever it may be, guidance on timeframes, etc. So they're clear on how to approach that process using a Guernsey fund structure. That might hopefully help to sort of, dispel some of the myths.
And Tony, as far as, just again reflecting back to what John said at the beginning, and he was laying down the gauntlet saying, yes, $1 trillion, blah, 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 hooray for you. But, Guernsey should be looking to double that. I want to ask the whole panel, is that reasonable? Can you see that happening?
Absolutely. Look, we're trying to raise £1 billion. So we'd love to be a significant participant in walking down that path. I think our experience has been as easy as any experience I have had starting a fund, and I've been doing this for a long time, especially given what I've already shared, which is that we were on the cutting edge on the defense side. So we were breaking new ground with Guernsey on figuring out how to, if you will, create a template. So I don't think that, to answer your question directly, I don't think there's any question in our minds that will happen. We'd love to be a significant part of that.
I'm very confident. Peter?
I don't see any reason why it shouldn't happen. I think maybe some of the sources of financing will change. So where that capital is coming from will probably change. The industry's evolving in terms of where the weight of capital is coming from, probably shifting a bit more towards the East, Middle East, and also obviously more of a focus on private wealth and retail channels. So I think the next $1 trillion of assets under management will come from perhaps slightly different sources than the previous, and Guernsey may well need to evolve its regulation structures to better service those sources of capital going forward. Yeah. But I think the jurisdiction has already shown a lot of nimbleness to date, and so no doubt will continue to do so.
Ruth, Peter makes a valid point. Yes, the second trillion probably will come, but it'll probably come from different sources. Does that matter specifically to you, just thinking about where those funds are coming from, if they are moving further and further east?
In terms of the sources of capital?
Yeah.
No, what Guernsey provides is a regulatory framework that allows us to sort of crowd in capital in a responsible way. I think what actually Guernsey could be doing to help us with that, to get to that extra $1 trillion, is really thinking about how the capital wants to invest from a sector perspective. You know, we've talked about the geopolitical tailwinds that we've got, heard from Tony, and sort of the defence being a first of its kind in terms of coming to Guernsey. You know, there will be more and more funds, I think, that are specialised to try and attract these different pools of capital from, you know, globally and more diverse funds, and actually having something like the natural capital fund or sector specific support to raise capital, I think would be a really good way they can support us in doing that.
Louise, you were nodding.
Yeah, I mean, we've talked a lot about regulation and the different types of fund structures, but, you know, Guernsey is a small place. It's 65,000 people. So, you know, around that scaling to 2 trillion, they're going to have to make sure that all the service providers are able to service that money that's coming in and make sure that they keep that same level of service and the same quality of service. And so that's going to mean that everyone's going to need to be embracing technology and being able to deliver the services that they can as efficiently as possible, and I think that's going to be a challenge.
Well, I think it's fantastic to end on a challenge, and it is bang on time for a coffee break. We're going to break for an hour of chat and schmooze and coffee, and I'm assuming some biscuits and cakes. But for now, please say a very big thank you in the form of clapping to my panel.